Hey folks, David Frost, mystrategicforecast.com. We're here for another episode of Common Sense Technical Analysis, Tuesday, June 10th, 2014. Looking at a daily chart of the SPY, nothing going on today. The SPY finished up 2 cents. Basically, the S&P was flat. Basically, this is going to be probably a sideways to nothing week. Today had the makings of a little bit of a down day early on, but it didn't materialize. I had said yesterday that I thought if there was going to be two potential down days, one was Tuesday and the second one is Friday, so that still holds true. I think we'll see a down day on Friday. However, if we don't get a lot of volume, don't expect much of a down day. You know, as the Dow goes 7,500 point tops, if there's no volume, and the S&P maybe 8-10 points if there's no volume. If there's volume, you can double or triple that, and we'll see what happens. But we'll talk about that as the week goes on. So nothing going on in the SPY, still in bullish mode. With no volume, you know, the market's just going to continue to float around sideways to higher, and that's the mode we're in. So let's take a look at the interest rate market and see what's going on there. Here's the 10-year interest rate. Okay, so right now the 10-year is at 263.5, and I think we're going to see a top end right around, I would say, this high here, maybe pierce it slightly higher. I'm looking at this day here where the high was 266, so look for 266, 267. That's going to be my top end on the 10-year for the time being. However, if we go sideways from here for about a week to a week and a half, I think the number can change, and maybe we can challenge the 200-day moving average right up in these highs here. But right now, I'm looking for this to be the top end of the 10-year. Let's switch over to the 30-year real quick, and what we see here is a similar pattern, and you know, my high for the 30-year is right around 350. So I'm looking for this high here. And we'll see what happens. As you know, I am in the TBT trade, and we can switch over and take a look at the TBT chart. And what you'll see is the TBT chart is basically a mirror image of the interest rates, and the TLT is the opposite of that. So let's just take a look at the TLT. You see the TLT has been going down as interest rates have been going up. So I'm going to go back to the TBT because since I'm in that trade, I'm going to tell you what my target is for now. And basically, I'm going to look for 65. I thought it was going to go higher initially, and now I've revised my target to about 65, and then I'm going to take it off the table. And then I think over the next few weeks, we can see the market continue to float higher. And if that's the case, we can see that interest rates, head higher, which would basically be TBT going higher as well. But what I think may happen, and this is why I want to take it off the table, because I want to protect against this. When the market comes down, I think the bond market will rally and interest rates will come back down again. And if that's the case, you may see the tell ahead of time, a couple of 3 weeks ahead of a big market turn. Usually the bond market begins to tip us off. And I don't want to get caught in that. So if we see interest rates move lower and TBT moves lower, I'd rather be out with a slight profit rather than sitting with a losing position. So that's my strategy with TBT going forward. Let's take a look at gold. And the gold market has bounced off the GLD, has bounced off that 120 level, I said, a little bit lower. And, we're still bouncing up, maybe come up to the 20-period moving average, 22.5, maybe on the outside for the time being, maybe even this window here at 123. But then I think we head lower again into July. So that's the way I'm playing GLD. And in July, I may look, if we see the correct pattern, I'll look for a long, and I'll issue that to the members on GLD when the time is correct. Let's take a look at the USO, and we had a nothing day in the USO. The USO was up 10 cents, but basically, I still think this can head higher, and I want to bring up the weekly chart and show you what I'm looking at. I'm looking at this double top here, 39.40, 39.5 to 40. That's basically the area where I think that USO can get to, and that would coincide with the crude contract price going to about 106 to 108 maybe. If we saw, I'm not going to call it a super spike, but if we saw a spike, 110, 112, which brings USO to about 41, 42 in my calculations. So that's what we're looking at. There will be a time to short oil, but not now. I know oil is still in an uptrend, and we don't short uptrends unless we have good reason to. And with oil, I have no reason to short it right here, right now. Last chart we'll look at is the VIX. And the reason I want to look at the VIX, because I'm going to give you an idea. The VIX broke 11 today, and it finished at 1099. So, that's really, really low. And what follows low prices in the VIX is usually higher prices in the VIX. So, being that I think Friday is going to be a down day, here's how you can play it. You can buy a short-term option contract on the VIX Thursday afternoon. And if the market on Friday isn't down with volume by 10:30, it's not going to happen. Get out of the trade, lick your wounds if you take a slight loss, and move on. But if there's any volume in the S&P, and the volume is on the downside, or the market is on the downside with volume, you can see the VIX spike up $2-3 in a heartbeat, and that should be a good trade. But realize that if there's no volume, it's not going to happen. There's a lot of other ways to play Friday if you want to play a down day on Friday, and we'll talk about that as the week goes on. But that's just an idea. When I saw the VIX below 11, you kind of start licking your chops, because you know that over the summer, this thing's going to spike up when the market comes down. And if that's the case, now is also maybe a good time to start lightly collecting some longer-term VIX options, for example, out to maybe August, September. And if you do that, you should be rewarded, but don't buy everything at once. Just start to edge in if you want to do that. Anytime you see the VIX below 11, you can certainly edge in, and you won't get hurt. You shouldn't get hurt. Anyway, I'm going to leave it there tonight, folks. I think that's enough. There's not much going on in the market, so when it's quiet, it sounds repetitive from night to night, but nevertheless, it's good to keep a fresh eye on the market, and targets do change, so I gave you some tonight. And this is David Frost, Common Sense Technical Analysis, and we'll see you all on the charts.